Hey folks, welcome to VerifiedInvesting.com. My name is Gareth Soloway, Chief Market Strategist here. Now, in today's video, we're going to deep dive into the breakout in natural gas. We're also going to look at oil, which has just fallen into a major gap fill. So there's some stuff going on here in the energy sector, and we've got to take a look and find out where the next big move is coming. So let's start right off here. This is natural gas, folks. And again, this is the daily chart of natural gas. And what we could clearly see is that natural gas has had a beautiful move to the upside. Look at this extension move here. We've broken recent highs. Now, the first thing that you want to pay attention to here is that the bullish pattern was signaling this. What do I mean by this? Well, this is called a classic cup and handle pattern, right? So you can see again, cup and handle pattern. So that's a bullish pattern in technical analysis. And you want to be aware of that because it's basically giving you a breadcrumb to the likely move to the upside, which is what has occurred. All right. So we've had our head and shoulders, our cup and handle pattern breakout. The question now becomes, how high can this go? And what I did was I said, okay, well, we had this little pivot top right here, but we're really above that at this point. The next major spot, we have to start looking at our key pivot points. The next level would be at $4.20. So the question is, are we headed to $4.20? Let's zoom out on the bigger chart picture and take a look. All right, so first and foremost, what are we looking at here? Well, I see a trend line right through here, and this has me a little bit concerned for natural gas in the near term. All right, so we were talking about maybe going up there, but we have to respect this trend line. This trend line again goes back to the lows from August of 2024 through the low here in April, which obviously we had the sell-off because of the tariffs in April. That affected natural gas. We then bopped around. We finally broke down, and we've now retraced to the scene of the crime. So first and foremost, a lot of people will look at this and say, oh, there's no resistance until we get up to about 420. That's not necessarily true. Now, am I looking to short natural gas? The answer is absolutely not. Why? Well, because natural gas is called the widowmaker. That's its term on Wall Street amongst commodity traders. And generally, when nat gas gets going, it can have major moves, like what they call rip your face off rallies. And so I'm very reluctant at one trend line to short nat gas when it's not that extended, right? I mean, it's one thing if we went from, $2.50 all the way to like $7 in a straight line. The upside is ridiculous at that point. If you're into a trend line or multiple trend lines, a short is an obvious solution. It's a high probability trade. But in this situation, what we see is we've really only gone up for about 2 weeks for a total here of about maybe 15 to 20%. That's not abnormal for natural gas, all right? So that's number one. So yes, you're at resistance, and if you're a bull, you need to monitor this level very closely. But at the same time, for me, and I can only speak for myself, I am not looking to short it there. Now, the next level I would pay attention to is something here. We take our high going back to 2022, and we drag this line down, right? Now, look at this, guys. Look at this. So now you're getting to a point where you now have a high pivot here, all right, going back to your major high around $10, connected through this secondary pivot, connected through or kissing this third pivot. And look, price is right into that. Now, the more lines we get in that direction, it is starting to sway me a little bit as a potential shortable opportunity. Like essentially, I still am not going to do it yet. I need to have more factors because again, we know that this chart can be a rip. I mean, if it breaks here, it's going super. I mean, it's going to rip to the upside. But look at that, folks. That's amazing to see two trend lines. This one, by the way, goes back to 2022. This one goes back to 2024, and they're both coexisting. Now, I'll say this to you. If you're someone who is a high risk trader, meaning you're okay taking on risk, this actually is probably a pretty good short on natural gas for a pullback. But if you're someone like me that looks at risk reward, right? So if it breaks through here, granted, you could stop out immediately. But if you don't, it could go up another 10, 15, 20% versus what's going to be a pullback. If it's rallied 15 to 20%, what's a pullback? Maybe 7%. maybe half of that, 7 of the 15%. So again, risk reward to me is not really in line with what I want as a technical trader. So again, this is resistance, no doubt about it. We then look at our next key levels. And this is where we're going to get even more interesting, guys, right? So what we do is we say, okay, well, we do know this is another level right up here. This is your former pivot, and then we have a secondary pivot right up in this range. Now, the question becomes is, do we have other factors? Now, the first thing I would do is say, okay, well, what about back here? Is this a trend line we want to pay attention to? And the answer as of now is it's interesting, but it's not anything significant. And then I draw this line in. Now, this line's interesting, and I'm going to tell you why. And in fact, I'm going to erase this. I'm going to show you why, folks. So what we're going to do is we're going to use a parallel trend line. And essentially what we're going to do is we're going to take this here, okay, and we're going to drag it down to this area here, right? And so again, essentially what we have there, and we can raise it up just a tiny bit in that vicinity. And this is now something that I'm paying more attention to as a high reward, lower risk level. And listen, I want to be clear on this, is that there's no guarantees we get through this current level. Like I said, could you pull back? Absolutely. But what would be like your general pullback? All right, so you rallied up, maybe you pull back here, right? You have resistance, right, or former resistance here we broke out. So you're looking like, 365, 370 back to about 335. So again, that would be about a 10% pullback, maybe a little bit less like we talked about. So again, it's nothing crazy, but that would be your reward for the risk you're taking on in this trade. If it gets through here, you're now talking about a longer term parallel that is very interesting, right? So again, you have your longer term parallel. I'm going to get rid of these little circles to just keep it as clean as possible on the chart. But notice down here, we have a line. This is parallel to this area right here. We can even, again, raise it just a tiny bit to get it right to these highs and right to that high as well. And then it just pierced there briefly. But that's a parallel right there. That is a thing of beauty right there. And so if we were to break through this 370 level, I actually think you go up to about 530. And what's fascinating about this, right? So number one, right? What are the things I look for as a trader? I look for extension of a move, either up or down. It has to be very extended because that's the rubber band effect. Remember, in trading and investing, the further something gets in a straight line, the tighter the rubber band is being pulled, and eventually it snaps back, right? And if it's just pulled a little bit, the snapback's very soft. If it's pulled really far, the snapback's even harder. And that's what we're looking for, right? So we look for something like that. And then I say, okay, well, now we have a parallel. So we have a target, right? It's around 527, 530. And then we also say, well, what about here? Look at this look at how you went up, you came down. You went up, you came down. You went up, you came down. You went up and broke down. Connect those levels together. Holy cow. What did we just discover? We just discovered a dual factor extension move where I would pull the trigger on a short. Now, would I go long nat gas here? No, because it's into resistance, right? But if it were to bull flag, maybe on a bull flag, I'd go long for that bigger move up. I'd have to reevaluate at that point and see what the chart is telling me. But suffice it to say, this is literally, you've watched me break down this chart of natural gas between where resistance is currently and where I would actually take a trade on natural gas. And again, I do this and I kind of walk you through all my thought processes because I want you guys to learn, obviously, and kind of understand. Now, next, what do we want to do? We want to then take a chart of oil. Now, oil's interesting, right? Because we had this beautiful drop and then this bear flag, and then it broke down, retraced to the scene of the crime, fell again, didn't break down further. You could see this little area of support, and then eventually it bounced up, kissed the scene of the crime, and now it's finally breaking down. And did you guys see what was happening here? There was this little bit of a level right here where it fell, bounced, fell, bounced, and now it's breaking. So oil is breaking to the downside, but look at this. There's a gap fill right here and these pivot lows. So even though oil is falling today, it is not in free fall because you're now into a secondary support level. Okay. Now, again, would I buy it here? Heck no, because of the same thought process of, this is a major drop and it's coming into technical support. And well, I shouldn't say a major drop. This is a drop, but it's not like an extension move, right? When you look at oil, I mean, how much has oil fallen from the highs to the lows? 8%. That's not an extended move in oil. I mean, I'm looking for 15, 20%. So what I do now is, in general, I would expect a little bit of a bounce here, right? Then a breakdown, a continuation flush, and I'd start to think about a swing trade long at this lower level here at around 55. So really another $5 down. Now at that point, would this be an extended move from this high down here? Yes, now we're at like 17%. That would be where a high reward, first of all, you have a pivot low, so double bottom, but also a high reward differential of risk versus reward. So those type of things are important. Now, what we also want to do is we want to extend out the charts, and we want to take a look, and we want to say, okay, well, what does this, I mean, what in this range tells us that that level could be impactful? Okay. And again, that's important to do because you want a secondary factor. Like if I'm thinking about going long on oil at 55, yeah, it's great that it's extended and falling, but I also need it to come into a support with multiple factors. This is just one factor. This is just one factor. That's it. And so we need more than one factor. Remember, if you have one factor, okay, that's good. You probably are at 60, 70% odds. But if you can get two factors, you're knocking it up to 75+% success rate. And that is where the golden ticket is going to get punched, right? That's where you say, okay, I want to take trades constantly. And so what I have to do is I have to really zoom out. In fact, let's go to the weekly chart and let's take a look here and see what is in this range. I mean, is there anything in this range that tells us there might be an opportunity here? And to be honest, right off the bat, I'm not seeing anything. So, I mean, yeah, maybe a little bounce there, but that would dissuade me. And you guys are watching me do this in real time. Like, where would we start? I mean, number one, this is scary, right? Because if this, look at this trend line. If we fall to this trend line, the economy's in tatters. I mean, I think we can all agree with that, that the economy, again, is in tatters at that point. There'll be plenty of long opportunities before that. But we also have this level down here around 43 or so. And then what about, let's see here. What about an upsloping trend line here? All right, so we're starting to get a little bit of a mesh. You also have this area right in here where it's kind of coordinating. This one's way lower. Like this would be a bear market recession target on oil around 27. But this area here around 43 down to 40, if we fell there, that would start to get my attention. All right. You also have, you could also make a case that you have down sloping trend lines. Let me see here on this. If we drag this through, yeah, that's starting. See that? So see what I'm doing here, guys? So we're looking at, look at this. So high pivot, high pivot, high pivot, low pivot zone, low pivot, and low pivot. And where does it all coexist? Right in here. And so listen, this is really, again, you guys are watching real time. Well, it's recorded, but I'm analyzing this in real time. I do this, by the way. I want to be clear on this. When I do these videos, I don't go over the chart and I'm like, okay, let me find what exactly to show them. Like literally, I went in. I like doing it this way because you see my thought process. You see as I'm learning, as I'm studying the chart in real time, and you see like, oh yeah, well, initially I was like, oh, $55 might be a level. It'd be oversold. It'd be into this level. Yeah, for a quick bounce maybe, but not like a really good quality, like multi-week bounce, which is if I'm doing a swing trade, and generally I want to get 5 to 10% on oil, right? So I got to be able to get a 5 to 10% bounce on oil. Otherwise, it's not worth my time, right? And so really what we're seeing here is the big level, down sloping trend line, these two trend lines, one going back to 1998, by the way, through this low. Now, you might say, well, what about this? Well, this was the COVID collapse where oil actually went negative. It was incredible. That's something that I think we should just be aware of. But notice how this low, so if we just talk about levels again, right? We say, all right, so 1998, then we have our 2016 low. Then here was COVID. But look at how after COVID, it retested and reformed that line. And so that line becomes important. And then you have your down sloping line. Then you have this line right here. And there you have it. And even right here, look at that. Look at that top right there. It's all coexisting basically between $43 and $40 a barrel. So put it to you this way. Could there be a quick trade for aggressive trade? Just like natural gas, right? Natural gas is into a level. If you're aggressive, awesome. Go at it. For me, a little bit more conservative. Where am I going to look for the bigger bounce, the longer term bounce? I'm looking $43 to $40 on crude oil. Hope you guys found it useful, guys. Again, I love showing you the thought process, how I'm arriving, the multiple factors. Remember, the more factors you can find in a level based on trend lines, based on fibs, whatever it is, the more the odds of your success go up. It's really like that. It's like, all right, I can be a great shooter in basketball, but if I can't dribble the ball, doesn't really matter, right? Like I'm still going to be a crappy basketball player. But if I can shoot it, if I can dribble, if my defense is good, you become the absolute player and you're probably going to win. And that's what you got to be in trading. Find the factors. Be a prestigious all factor follower or whatever you want to call it. It doesn't even matter. You guys go do your rock star stuff. I'm here for you guys. That's what I do this for is you guys. I hope you have a great rest of your day. Come check us out at Verified Investing.